Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Wednesday edition. Today, I will not be doing an hour show. I can't. I'm going up to Los Angeles to go see a concert tonight, so I will be doing a shorter show today, answering a viewer question, and of course, doing my best to entertain you all. So I hope you all did well today. The image is dated 6 or more screens. Everybody trades with their phones now and posts screenshots. All with the perpetual heckler, Tom. I love it. Yeah, this is the graphic for today's show, and I asked AI, I said, show me a trader digesting a ton of information and looking at a lot of different market factors. And I think it's, the reason I like this is, it looks like chaos, and to somebody who's an untrained trader, you look at it and you go, oh, it's overwhelming, there's just too much stuff to look at. And I think that the reality is, at least I'm hoping that you guys who have followed me for some time know that there's actually an air of simplicity to it. Like, I'm not spending a lot of time doing market analysis. Now, there's some people, like Tom here, who is, I think, at least from my perspective, much more in the weeds. He likes to know all these nitty-gritty details and statistics about companies and what they do and different. See, for me, I don't really care too much about that. I mean, the bottom line of what I'm trying to do is I'm trying to take a dollar and grow that dollar into something bigger. Ideally, make it $1.10 or $1.20, $1.30, and do that consistently and compound it over time is really my goal. So I try not to get caught up too much into companies, management, CEOs, products, although it is important to know that if you're a long-term investor. Most of my trades are shorter term, a couple days, maybe a couple weeks. If I'm in some longer ones, I mean, it's rare you'll see me in something for months on months, other than silver, which I plan on holding for a long time. So we're all going to do things very differently. So today's show came about because of a question that showed up in yesterday's chat. And unfortunately, I didn't have a chance to get to it yesterday. And I thought I'll make a whole show out of that one, which was going to be today's show. And I can't remember the gentleman's name. I wish I could give you props, but here's to you. The question was, let me get it over here. Says, what is your daily trading routine? Okay, well, I can go a couple different ways with this. So I have, I guess I would say, 2, possibly 3 routines. There's one that I have for short-term day trading, and there's another routine that I have more for swing trading. And I will say that now most of my trading is done on a swing trading basis because I just don't have time to be there at the crack of market open and to just be in front of my computer all the time. I don't have that. I'd rather find a setup, something that looks good based off the criteria that I look for, set up the parameters, make the trade, and then just let it do its thing. If it stops out, it stops out. If it's my target, it's my target. Let it be. I mean, that's the easiest way to do it. So let me walk you through at least the 2 styles that I look at, and I'm hoping that for some of you who may be overcomplicating your trading, this will be a wake-up call to simplify things. And as we go through this, good morning, Joachim. Hope, what time is it in China right now? It's probably wee hours of the morning over there. If you have things to add to this, please feel free to interact. You guys know I love the interaction as well with you guys on the program. So let me start off with the first one, which is going to be a day trading routine. Now keep in mind, my background is very different than most day traders today. I was on one of the largest trading floors in the United States, retail trading floors in the United States, not like the CME or CBOE or anything like that, but one of the largest retail trading floors in the US. And on that trading floor, if you weren't in your seat by 6:30 in the morning and do 20 trades a day, you had to do at least 20 trades a day. If you didn't do that, you weren't guaranteed a seat. So for me, I'm in there at 6 o'clock, right? I'm in there 30 minutes before the market's open, and I'm going to actually show you an evolution here, right? So this is back in 1998. I'd be there at 6 o'clock in the morning. I'm digesting all of this information. I'm glued to CNBC to see what the pre-markets are doing and what the news is happening, all the stuff that CNBC regurgitates, all the data that's out there into my head, and I take that and now formulate an idea about what to trade that morning. So I have about a 30-minute window to prepare. And once the bell rings, it was just basically a free-for-all. If something was moving, I was trading it. Right? That's, in its simplest form, what day trading is. In day trading, you're just looking for something that is moving in one direction, either up or down. You could also do it with sideways, but it's a little bit easier if something's got a nice trend up or down. So that was it. I mean, very simple. But there are things that I would look for. So what did I glance at least when I started, and if I day trade today, I still do this. First thing on my list is I check all the headlines and earnings. Now, you notice that one of the pieces that I do at the end of every show here is I go over the economic calendar for tomorrow and I go over the earnings calendar for tomorrow. For some of you, you're probably thinking it's mundane, it's boring, I don't really care. You should. And it doesn't matter whether you love Boeing or you just have a hatred for Apple like I do. It doesn't matter. When those things report, they're going to have an impact not only on that company, but potentially that market sector. And if that company is big enough, like the FANG stocks or the Magnificent Seven, it could impact the whole market. So it's critical that you know these things. Now, when I say check headlines, what I'm really doing is I'm very quickly glancing at the news, right? And I should specify these separately, but I'm just real quickly glance at news. And when I say I glance at news, I'm going to show you how quick it is, right? So I go here, let's go to Yahoo Home, and right, someone was shot at the Chiefs Super Bowl parade. Oh, great. So I'll literally start the day like this. I go through here, and I'm just going to go look at headlines. So Ukraine seizes upper hand against Russia in Battle of the Black Sea. All right, I'm not so concerned about that. Oh, Steve Wilkes was fired. Goodbye, Steve Wilkes. You did cost us the game. And I'm just looking for anything that's big enough to impact a market segment, the overall market, a specific sector, a company. To me, that's key. I don't see anything here. So typically that's it. I just start with the main homepage, and then I go over to the finance section, which of course is going to refine down here a little bit. And then from there, I'm just looking, is there anything really that's in play, right? So I'll just scroll down here, and I have it kind of zoomed in, so the headlines are going to look a little bit weird. Man, we talked about this yesterday, guys. I said NVIDIA may pass Google. Happened today, right? Now NVIDIA is the third largest company in the United States. Crazy how quickly that thing has shot up. So I'll just run through here. January data shows bumpy path to 2% inflation. We talked about that as well. So the fact that Occidental Petroleum here beat estimates may make me interested in looking at petroleum plays, oil, Lyft. Right, maybe I'll go look at Uber or other rideshare companies based off that earnings. So I'm just going to really go down here. And it's not saying I'm trading any of these. I'm not trading anything. I'm just glancing to see, is there something that catches my eye that might be a catalyst, either up or down? And remember, if a headline says Lyft has blowout earnings, that does not mean I'm going long. And quite the contrary, it may actually mean my bias is to the south side. So you guys saw this headline right here for Lyft. There it is right there. Lyft soars as CEO says, my bad on earnings gap. It's up 35% today. So what happens is the retail investor is going to look at this and say, Lyft soars. Oh, wow, it's taking off. It's up 35%. Let me check on this. Oh, they made mistakes with their earnings. Then all of a sudden, I want to go and look at LYFT and see, is there a shorting opportunity here? And you notice that it actually closed this gap. There's this huge gap that goes from $16.23 all the way down to $11.19 when it reported earnings back in February of 2023, a year ago. And all of a sudden, you see this thing jump right up to that gap. That actually, for me, even though the headlines and the sheeple are all being told go long, I'm looking at this as, right now, on my list, this is a potential short for tomorrow. Now, I'm not saying I'm going to pull the trigger. I want to make that very clear. I'm not going to pull the trigger just because it's in a supply zone, at least what I perceive to be a supply zone. I look at that and say, okay, here's a piece of paper, my potential place for tomorrow. I'm going to put that one down on the negative column because I think that might be a short play. So we go here, LYFT. So now I have 3 companies on my short potential list. So if I'm looking from a day trade or swing trade perspective, either or, I can use those headline pieces of information to potentially set up trades. I'm never going to buy something because news is good or bad. I'll never do that. It's about the setup. Where is it at? What does the price levels look like? What's the emotion look like? And clearly a 35% jump today for Lyft was phenomenal, but is it overdone? Does it warrant that big of a pop based off the earnings issue that they had, which I don't exactly know what that issue was. All right, let me finish with all this and I'll get to, I see a bunch of comments coming through here, so I'll dive into all those comments in just a second, but let me get through my day trading routine. So that's checking the headlines. Then basically I'm looking at market levels. So when I'm day trading, I've got a very specific setup that I look at. I actually look at 5 time frames, 5 of them. And I have 10 up here for those who are watching the video because I have 5 for the market and I have 5 for whatever it is I'm looking at. And typically on the top row, I will have, I have 3 screens. On the left-hand screen, it's broken into quadrants. On the top is the market, and that's typically going to be the S&P 500. Unless I'm trading a tech stock, then it'll be the NASDAQ. So I'll have the S&P futures on that top chart there. And the S&P futures is on the far left chart on the top is going to be the daily. And then I have the 4-hour right next to that. On my right-hand screen, so I go daily, 4-hour, hourly, 15, and then on my main screen, I have a 5-minute. That's the 5 time frames. Now that's the market. Directly underneath that, I have the exact same time frames, but for whatever securities I'm looking at. So say, for example, I'm looking at Lyft, and I want to look at Lyft for tomorrow. If I'm looking at Lyft, then I'll probably look at the S&P 500. So I'm going to have S&P on top, Lyft on the bottom. I'm just looking for correlation because typically things move with the market. So if I see the S&P rolling over, then that might lead me to believe that we're going to experience Lyft shortly rolling over. So that's kind of the setup design. And from there, I'm just going to look at supply and demand zones. I'm looking at levels. Where do I think it's going to turn? While I will map them out on the daily time frame like I do on this show, typically most of my intraday stuff is going to be on the 15 and the 5. Right? Those are the real levels that are important because I'm going to try to chip away with small market moves. Now, again, it depends on what I'm trading. I've shifted away. Well, that's not really true. There are days where I find good things in the equity markets, but typically, if I am going to day trade, I think futures is probably the better way to go. You get the leverage of it, you get the preferential tax treatment, 60-40 tax split, so futures is probably the way to go. Continuing on with my list, I've got market expected turning points. Again, that's just looking for supply and demand zones, and then lastly, I just make trades. Now, I'm at a point now where I don't do a lot of review anymore. I used to have a journal and write everything down and take screenshots of my trades, but having done this for 20 plus years, I don't think I need to do that anymore. I think for those of you who are in your first couple of years, it may really benefit you to go back and review those trades, analyze them and say, what did I do right? What did I do wrong? Was there something that I missed? And we'll always know after the fact if there's something that you missed because you can see the results of the trade. From there, you can evaluate changes that you might want to make to your trading strategy. So I think if you're newer, definitely journal and track your trades and see what you did right, what you did wrong, but be very critical too. There's no harm in calling yourself stupid and saying, man, I really did something stupid there, right? And you should also pat yourself on the back if you did something right. So that's day trading. Now let me see what the questions are here. Tom says, I tend to look at price range and look at the measurable values of a company and bypass the hype. I like P as a basic check of value versus hype pricing. Great. And again, right there, you're already starting to shape your style. Now, if I'm a day trader, PE doesn't mean a damn thing. PE is irrelevant. Who cares, right? As a day trader. For Tom, and correct me if I'm wrong, Tom, I don't want to put words in your mouth, but it's more like if you're a swing to a longer term position trader, then yeah, PE valuations are very valid, right? You made the point several times about Tesla going, it's way overvalued compared to its peer group. Therefore, over time, that that PE ratio should start to drop. And one of two things is going to have to happen to make that work. Number one, price stays right where it's at, but earnings increases significantly. That drops your PE ratio. Or the current share price is going to fall down and therefore come back down to normal PE ratio. So that gives you long-term investment trading opportunity. Let's see, what else we got before they disappear off my screen. Skills Awesome says, my routine is to trade at night when everything is calm, like I learned from Roger Best. He said he really preferred to trade afternoons, because everything slows down. Very nice, no whip. That's a great point, Skilled Stocksman. And again, that's a matter of personal preference, right? What Roger is saying there, and Roger Best, great guy. If you guys had the opportunity to take a class with Roger, just a phenomenal individual, great human, and his approach to the markets was very disciplined. And his idea, let's take surfing as an analogy here. Most surfers want the big waves. Like, they're not going to go out there if there's no waves, right? They want the big swells. Give me the 10, 12, 15, 20-foot waves because that's what I want, the tube, right? Give me that excitement. Roger's like, BS. I don't want that. I want the slow roller that's like 3 feet. It's a small little wave, but it's easy to get up on that surfboard. I'm not worried about some crazy crash happening and it's rolling over on me in the tube and just all those extra risks that big wave surfers face. Roger's like, give me that flat market and I just need a tiny little move up or down and my position size will accommodate for that. So yeah, I like Roger's approach. I definitely do. I'm not trying to push one style or the other. The important part is it has to fit your personality. If you don't know what your personality is, be introspective. Take a little break and look back and see what's your patience level. Are you fast? Are you impatient? Are you slow? Are you disorganized? What's your risk appetite? All of those things can factor into that decision. But yeah, Roger's style, it always shocked me because I always ran away from midday trading. I hated midday trading because I was trading aggressively, but it didn't go anywhere, so I ended up just losing money. Whereas Roger would do things, that was his preferred time, and that's where he made the money. So different strokes for different folks. NVIDIA earnings next week can move the market. Yeah, absolutely. That's going to be our double popcorn. That's going to our popcorn and what are those milk duds trade of the day, right? And for those who aren't sure if your company ever reports earnings, if you ever look at, depending on which platform you use, I actually really like TradingView for this. If you look at the bottom here, it'll give you little E's. E's are for earnings, D's are for dividends, S's are for splits. So you can see their last earnings was here on, what's not giving me a date? Oh, there it is. Last earnings was on November 21st. Our next earnings is going to be February 14th. Oh, that's today? I could have, I'm sorry. Earnings is, there you go. Freaked me out for a second. It's next Wednesday. That's what I thought. I was like, wait a minute. So earnings next Wednesday for NVIDIA. Of course, we'll talk more about that when we get there because it's going to be crazy exciting for that one. Boy, yeah, I don't know what to make of that. We'll talk about that next week when we get there. I'll make sure I get through all this stuff on the show today. Let's see, what else we got here? Lifted up 60% yesterday, all-time high, but then admitted that they had added extra zero in one of their numbers. Gotta love that. Oh, gotta love that. Gotta love accounting irregularities. Rideshare drivers, UNL announced Valentine's Day walkout protest. I didn't see that. I consider looking at the charts during all day as counterproductive. Andres, I agree with you. I'm the guy who literally sat there from 6:30 in the morning to 1 p.m. every single day, and then I would also stay after hours and do research. I don't know if it's necessarily counterproductive. You can certainly learn a lot, but you should have a purpose of looking at markets that long, right? Educating yourself, learning, get routines and habits down. I do not spend that much time looking at markets. I know what I'm going in there to look for. I get in, get my information, make my plan, and then I'll move on. And I'll show you that here in just a second and kind of some of the things I look at. What is a milk dud move? Oh, it's just one of those things you commonly get at the movie theater, right? So you get popcorn at the movie theater. I wanted to throw in the milk dud move. Just that's like the exclamation point on a popcorn trade of the day. I don't know. I was just adding on, Lisa, because NVIDIA has been, this move is just unbelievable. And I know, Big Ed, you've got some and others. You got your puts in place just in case as protection, which is probably the smart thing to do. You bought them a week or two ago, so the premium on that was probably pretty cheap. But boy, NVIDIA could jump to $1,000 a share. It could drop to $500 a share. You just have no idea what they're going to report. So it could be a wild one. I would definitely be excited to watch that at market close next Wednesday. What else do I got here? CPRT. It looks like an ascending triangle. I'll talk about what I filter for right now. That's actually, I like the chart. No problem, Lisa. I just threw out a random term there. I knew it would catch you off guard. My bad. All right, what else do we got here from questions? 1 second, Jay. Let me get through my trading styles, and then at the end of this, I'll do whatever you want me to look at. I'll look at. Did you see Gary Gensler on CNBC this morning? They drilled him about. No, did not see it. I don't watch CNBC. Just so everybody here knows, I do not watch not 1 second of CNBC. I do not watch 1 second of Bloomberg or Fox or any of that stuff. I don't watch any of it. I'll just glance at the headline. I know that if I watch CNBC, it's going to sway my decision. It's going to influence my thought process because I guess it's just the human nature. Your brain thinks expert on TV. They must know something. I'll take that as fact, and now I'm going to use that for my trade. What I've learned is they don't want fact on CNBC or Fox or Bloomberg. They don't want fact. They want entertainment. They want shock factor. They want you to stick around and keep on watching. So no, I don't watch any of that stuff, unfortunately. All right, let me go into the second one, which is what I do most of the time, and that's going to be swing trading. So it's somewhat similar, but here's the big difference. My first step is to filter for opportunities. I run a look all the time, or I run looks, I call them, on the market every day. And because I'm going to be leaving tonight, I'm leaving at 3 o'clock and heading up to LA, I did it early. Normally I'll do it some point in the evening. I run a scan for filters, and those filters help me just bring to the surface, out of all this gigantic ocean of things to trade, it brings to the surface things that, in my opinion, again, that's the key part here, in my opinion, represent a high potential trading opportunity. So what are those filters? I've mentioned this before. Number one, candlestick formations. I love candlestick formations. I do. They're my favorite thing to look for. They're easy to find. I love hammers and shooting stars. Those are my two favorites. And then I will look for haramis. And that's pretty much it. I don't really care for engulfings because I think in an engulfing pattern, you've already missed the move. So I'll look for hammers and shooting stars, which I did already today, and I'll show you some of those. I love looking for chart patterns. Remember, every time you look at a chart, it's a tattoo of human behavior. It's a permanent record of the emotions and behavior and facts about that security and the market. So it can tell you things. You can see the proverbial footprints of institutions, but you can also see the fear, the greed, the emotion, the exuberance, the panic on a price chart. To me, that's one of the big advantages. People just buy price thinking, oh, it's going to go up because it's going to go up. If I can look at a price chart like CPRT, all right away, I know that CPRT has tremendous buying pressure and it's getting stronger and stronger by the day, at least for now. And you're like, well, how do you know that? Well, I know that because if you look across the bottom here, I'll draw a trend line across the bottom just to give you a general idea. It's been making higher lows all the way back into December of 2022. So for over a year, it's just been trending up. Higher lows, higher lows, higher lows, and making higher highs. So right now, the pattern that I see forming on CPRT is what's called an ascending triangle, which is telling me there's a higher probability this thing's going to break to the upside. It also means that CPRT right now is getting very close to a buy opportunity if I subscribe to this upward trend line. So not only does this give you a potential swing trade to buy in maybe the next couple days on CPRT, but if it breaks above this upper dotted red line at 51.53, there's another entry point, right? So I don't need to be hasty and go, oh, I love Copart and I want to buy it right now. I'm going to look at that price chart and say, is now the time for me to buy it? The thing that a lot of you are going to say is, Merlin, but you miss a lot of trades. So what? So what? I could care less about a trade that I miss. What I care about is finding myself pressured to buy into something that turns against me and blows my account, or it just causes colossal losses, a dumb mistake. That's what I care about. If I miss a trade, big freaking deal. Who cares? All right, so chart patterns. And again, I love ascending triangles, descending triangles, pennant formations. I've mentioned that many times on this program. My final piece is indicators. And I have stressed this a lot, is that no indicator should make the trade for you. There should not be an indicator that you go, oh, that's going to be my trade because of this indicator. No, it's always price, and then you can layer on indicators later. So indicators that I like to look at, I actually really like to look at a thing called Bollinger Percent B. All it does is says, show me the Bollinger Bands, right? And I think most people here understand how Bollinger Bands work. Bollinger Bands oscillate between 0 and 100. Actually, that's not true. There's no oscillation. But you have the upper and lower Bollinger Band as being 0 and 100, right? Whatever those bands are, that represents 0 and 100. If it's out above the upper Bollinger Band, that means it's way overbought, way overextended. That would be a over 100 reading on Bollinger Percent B. So if I see something over 100, I'm interested in it as a potential short trade if it's coming into supply. On the other hand, if I have something that's a negative number, meaning it's gone so far down, it's now below the bottom Bollinger Band, that would be a negative number. Anything negative means it might be way oversold. Keyword is might be. Might be. Now, if I can couple that up with the demand zone, then I think I have a pretty good probability of that trade working out in my favor. Of course, the key here is I can take those trades based off of a Bollinger Band into an oversold situation, into a demand zone, but I sure as heck better have a stop loss in place in case I am wrong. What did I say there? I like that. A chart is a tattoo. It is, right? It's a, and you can't delete it. You can't change that picture of price. You know, this picture right here, that is a tattoo. It's a permanent record of the last, year and a half of Copart. That's it. This is not going to change. The only way that this will change is if they do a stock split like they did here on the on the 22nd of August last year. They just split, and that will just change the share price value, but the chart will always look the same. All right, what do we got? People need used parts nowadays. Yeah, absolutely. Absolutely. Hey, Johnny on the spot. Back again, my friend. I got 2 days in a row with you. What did I do to deserve that? Good to see you, my friend. Do you look for formations on the daily? Great question, Laura. Yes. Yes. It's easier to spot them on daily. So it's real, almost all my analysis starts on the daily time frame. So when I'm looking at candlestick formations, daily. When I look at chart patterns, daily. When I look at the indicators, daily. Always on dailies. Great question. Thank you for that one. Sometimes I get going here and I might have thought I missed it. Is your dollar cost average different from stocks and crypto and your perspective with buying dips? So I don't dollar cost average on stocks. There's just no point to it. I think dollar cost averaging it can be a kiss of death, depending on what you're buying, right? If you're dollar cost averaging into, let's say, an S&P 500, fine. If you're dollar cost averaging into something like, I don't know, Nikola, right? Because it's been going down. Well, it could go to zero. So a single stock, I'm not going to dollar cost average into. Indexes, you can. That's pretty much what a 401k does, right? A 401k dollar cost averages into mutual funds, diversified holdings for your entire career. So with crypto, I don't really think about it as dollar cost averaging. It's just continually investing, right? With Bitcoin, I will continue to buy Bitcoin. I don't really care what price does. I'd like to buy it if it sells off, but when I get an extra $1,000 or so, I'll go buy another $1,000 of Bitcoin, regardless of price, because I think, as you guys all know, that Bitcoin's going to be well into the six figures by next year. Oh, great question, Andres. Let me finish this and I'll get to that. If you're getting pop-up ads from Nathan Bear, run, dude's a scam. All right. There's a lot of them out there, man. A lot of them out. You shouldn't reply to anybody unless you really know them, well. So that was the first two pieces, right? Just filtering for opportunities. I ran through those formations, chart patterns, and indicators. Then I'm looking for those headlines like before. Same thing as I would do if I'm day trading. I just want to see what's moving the markets. Then I want to, again, glance at the headlines. I look at market levels just to see where the supply and demand zones are lining up. I mark the expected turning points, map out my zones, and then I will make the trades. So the only real difference here, at least for me with a swing trader, is I'm definitely focusing more on the bigger time frame, and I'm using a lot more chart patterns to find opportunities. So let me give you an example of some of the things that I found that might be on the plate for tomorrow. So you guys tell me, would you rather me go through my bullish ones first or the bearish ones first? All right, here, let's see what the market looks like. Here's the S&P. You want bullish trades for tomorrow or bearish trades? There's your S&P. Been on an absolute tear. Looked like it was just about to have a nice breaking point yesterday, and all of a sudden today, about faced. It was a nice move up for the S&P of 0.94%. So all in all, a good up day. Not much of a rollover. And, we talked about this. So what? We had a big down day. Not even a big down day, but we had a pullback in the market. This market is so beyond it. It needs a pullback. I was talking to a good friend of mine, and he was like, oh, man, this market crash. I'm like, what the hell are you talking about? What are you talking about, a market crash? This market, since October of last year to right where we are today, is up 21%. And you're telling me that you believe that a decline in the markets of 2.57% in 2 days is a market crash? Not even close, bro. Not even close. If we get to 20%, which would bring us down to a 20% drop, man, a 20% drop wouldn't even get us to those lows that we saw this move originate from. So yeah, no, this market deserves a correction and deserves one very quickly. Good to see you, Chio. All right, let me see. I've got bull, bear, bear, bull, bear, bull. I got 4 bulls and I got 3 bears. All right, there you go. Yeah, Big Eb, great point there. He says 14 out of the last 15 weeks the S&P has been up. That may be a record, right? That may be a record. And you all should be questioning, what the hell's driving that? Right? Are we in this euphoric mode that money is just raining from the sky again and everyone's like, I'm rich, I got so much money? How on earth is it that you have the highest levels of debt in human history, both for the government and for consumers, yet markets are all-time high? And maybe that's why we're just taking that money and driving the market up. That will come home to roost. All right, so I'm going to go with bullish because that was what I got more of. So here's just a few of them, and I'm not going to take a ton of time because, again, I have to get going here, but first one that came to mind was Electronic Arts, EA. Now, the reason I like EA is if you look at the chart picture here, it's obviously been showing some strength for the past year, making higher lows, but those highs remain about the same. And today on my Bollinger percent B, this is way overbought. Now, granted, maybe because their earnings, right? They had earnings estimates of they beat earnings by about 3 cents, so not a huge beat. But it's coming right up into this area of overhead supply. It's like deep in that zone. So I don't know, this one, I'm not feeling great about this one, but it did appeal to me on my radar, which is, I could go short on EA tomorrow if it starts to go lower. I just need to see it really start to drift a little bit lower. Stop loss 143.47. So this could be not only a swing trade if it does start to move down, but also if you're a day trader, you could come in here and be day trading this as well, just looking at it on a 5 or a 15-minute time frame. So this is an overbought on Bollinger percent B. If you want it, I can show you here. Let me get rid of, I don't like RSI, so I can get rid of RSI. Let me add in Bollinger just so you guys can see it. Let's go Bollinger. I'm just going to do the regular Bollinger bands, not the percent B, but just so you guys can see it. And you can see right now, it's outside that upper Bollinger band here. So that's what alerted me to this one. I normally don't look at electronic arts, but there you go. You've got Marriott. The reason I like Marriott is not only did it come down to the lower Bollinger Band, but you had a pretty sharp sell-off, and now you have a little hammer formation, right? It's been on a beautiful uptrend. Everything still looks good. You've got the moving average here is trending up. I mean, it all looks pretty darn good here. So I'm looking at Marriott tomorrow that if it breaks above 236.41, there's a potential long trade. And that long trade could be the beginning of a much bigger swing trade if I wanted it to be, or it's just a short-term day trade. You make that call on that one. Let's see what else I have on my, and then we already looked at Lyft. So I had a lot more bullish. I showed you the bearish ones first. So these are, well, actually I got them mixed up. Oh, sorry, Marriott was on a different, Marriott, I'm mixing them up. Sorry, I got my list crossed. GE. GE is the other one here that I was looking at as a potential short opportunity. And it's kind of crazy to think how GE has performed. I think a lot of this has to do with the splitting of the company into 3 separate companies and knowing that if you own GE shares, you're going to get some of those. This is another Bollinger Band percent B. Notice it's outside the upper Bollinger Band here. That is overextended. Now, key thing to remember is notice it was outside the upper Bollinger back here on January 30th and February 1st and 2nd and 3rd. So it's been outside that upper Bollinger Band. So it doesn't mean it has to come down, but it tells you it's a little bit overextended. The moving average is curling up. So the momentum here for GE is really accelerating. So by itself, I don't really care. I'm not going to jump on that one. But I scroll back here and I go look historically and look right where this gray line intersects here. Right? It kind of comes right back into this area where you saw a nice move down for GE. That may be an area of interest for some people as an overhead supply zone. It's not the greatest. I'm not going to say this is a great one. Would you use trail stops to lock in profits? Yes, I would. Absolutely. So that is the other bearish one. And I actually like this better if we take a peek at it on the weekly. I'm going to take a weekly, and then I'm going to turn off those Bollinger Bands so we don't have to be focusing on it. There we go. So there's the full chart of what we were just talking about, which is we came screaming back up and right back at the origin of this big sell-off here that goes all the way back to 2017. So this may be something over the next couple days that has challenges at this level, and if it does, that could make for a nice short-term pop to the downside. All right, that was my bearish stuff. I see a lot more bullish. I'm going to start off with Newmont. Oh, I like Newmont. So Newmont, all right, Newmont Corporation, you have one of my favorite patterns, which is a hammer formation right near the bottom here. One thing that's not really that prevalent here is I love seeing hammers with volume. We don't have one. So this doesn't make Newmont a great candidate, but what does make it an interesting candidate is it does come right back into the origin of a gap that goes all the way back into 2019. So again, I'm lining up not just the candle, not just the formation, but I want to see, is it into an area of supplier demand in the past that may act to support that area of supplier demand? So that's Newmont. I already looked at Marriott. FedEx. There's another hammer formation. Right? Now this one isn't as good because there isn't any real strong demand zone that it's into, but it's just something I might keep an eye on. And if I can get FedEx to break above 237.70, I've got a long trade with a stop loss down around 236.19, 234.79, somewhere in that area. So all in all, Great. You're going counter trend here. So this is probably, FedEx is probably the worst of the ones I've shown you so far. I don't have a lot of confidence in this one. But wait, there's more. Kraft Heinz. Again, all the ones I look at have to have ample liquidity. So I like Kraft Heinz because today, if you're to go from a supply-demand perspective on this one, you do have an area. Of course, it's in this yellow box here. Let me go to that one right there and get rid of this bad boy. All right, you did tiptoe down into a demand zone today on extremely high volume based off of earnings. It just feels to me like Kraft Heinz is going to bounce off this one. Now, this is after the fact, right? This is after the fact because it's already gone into that zone and has already started to move out. So kind of have to wait and see if it gets back in there tomorrow. But, this is people panicking, people freaking out. Kraft Heinz on their earnings today, they beat by 1 penny. Most likely said something negative going forward about prices and inflation, yada, yada, yada. But does that warrant a, almost 6% slide in prices? Well, we'll have to wait and see. So Kraft Heinz is good on. My favorite one, though, actually, let's do WMB, and then I'll show you my favorite one for tomorrow. Here's WMB. Williams Companies. Came screaming down today on an earnings announcement. Of course, you get this a lot with earnings. And there is my demand zone, which goes back to these lows from October of 2023. Hey, Jay, thank you very much. I appreciate that. I'll read that question here in just a second. Very nice of you. Appreciate it. Look at today's earnings announcement. Screaming down into these lows that we haven't seen. It's been almost, about 9 months, 10 months since we've been at these levels. Crash back down in today on Williams. That might be a great opportunity to buy near this demand zone with a stop loss just below it. Again, catching a falling knife. People say don't do it. But look at the volume. People panic sold here. You can tell because it's one of the highest spikes of volume on the chart. It's probably the second highest spike of volume on that chart on an earnings play right into a demand zone. Hallelujah. Great one. But we're not done. Here's the last one, and I think personally my favorite for the tomorrow based off of my filters and scans. Akamai. I love this chart of Akamai. You telling me there's no pain today? This is the largest spike of volume we've seen going all the way back over a year. Actually, February of 2023, almost to the day on an earnings announcement, it had higher volume. But today, this looks to be about 1 or 2 million a day, 1.5 million a day. And today our volume was 7.06. So huge volume on Akamai, bad earnings. It's down. And where did it fall to? I'm not going to do a zone. I'm just going to put a line there. So you guys, it's pretty evident. We're right to that demand zone. Now, granted, this demand zone has hit here a couple times. Boom, boom. But, this is one tomorrow that if I see it stabilize and start to move up, I'm jumping on this thing with a stop loss just below that. And if I'm wrong, fine. But right now, the panic is out there. Yep, hashtag panicking. People are crapping their pants on this. Like, oh my God, Akamai. What did they do? They beat earnings. They beat earnings by almost a dime. And they're down huge today, $8.2%. So, this is one that I really like because it's down to an area of demand, although it's not the freshest. It's, a major tech player, beat earnings. I'd want to go, if I'm a long-term investor in this one, I'd certainly want to go look at what was said at the press conference here, because clearly something was said to cause earnings to crater like that. But anyway, I like that. Are those sell orders investment? These sell orders investment companies? There's no real telling who it is, but there's certainly a tremendous amount of volume there, so you have to assume that there's some institutional selling going on there. That's only way you're going to get that big of a move is to have a lot of shares come in, and who's holding most of the shares? That's going to be the institution. So most likely that was institutional selling. Now, what happens over the next couple of days will determine whether the institutions are buying at this level. And my assumption, maybe a naive one, is that there will see some buying here right at 114.15, which would support that price here a little bit and get a move up over the next couple of days. All right. So that is, how much time I got? Oh, man, I'm supposed to wrap this show up. So that is, real quick, for those who are asking, my routine. I just look for these things real quick. I usually have a little piece of paper like this that has little plus and minuses on it. I run it every single day. A lot of times when we're talking on this program, you might bring up a chart or a symbol that I don't normally look at. And I look at it and go, oh, that could be a good one for tomorrow. And I just make a little note. I don't, just because I have, let's see, what do we get, 3, 6, I have 9 different companies on this list. It doesn't mean I'm going to trade any of them. And it doesn't mean I'm not going to trade all of them, right? Most likely I might trade 1 or 2. But if I don't trade any of them, it's just because they didn't meet my criteria or do what I thought they were going to do. I'll just back off and leave them alone. Let's see. What do you think about? I think you mean eBay. Are you talking eBay? I don't think it's CBay. CBAC Energy? Is it eBay or CBay? Which one do you want, Johnny? If it's CBay, I don't like it. Here's CBay's chart. Or no, CBAT. CBAY. Chart looks amazing, but I don't touch pharmaceutical or therapeutic stocks. So this is just I'm instantly out of this one. I'm not the person to ask because I've seen more accounts blown because people got involved with some pharmaceutical drug company and they here's CBay. I mean, look, it looks amazing. I wouldn't touch it with a 10-foot pole. I mean, you're up pretty big on that earnings or just whatever news it was here a couple days ago. But with these things, with a therapeutics company or drug company, all it does is one FDA miss on their approval, and this thing comes crashing back down 80-90%. So if I own this Sima Bay Therapeutics, I would take my profits and run. That's it. Pretty much what I would do, just because I don't trust it. I mean, I will say though, this chart is freaking amazing, right? It's gone from $1.70 up to $32, so that's phenomenal. But at a certain point, you gotta. I don't know when you got into this one, but you should be very, very careful of this one. Akamai is not a pharmaceutical company. Akamai is technology. Let's go. Are you using a scanner to find these patterns? Yeah, I use TradeStation just because they haven't charged me fees forever, so I love their. You sold in the after hours, buddy? That's not a good idea either. You put an order to sell in the open. I would wait and see what happens tomorrow. The good news for the CBay is it came out with whatever news it was, and it's really been just holding here pretty good with good volume, which means that people are not selling. So it could continue to go up, but I just wouldn't take you're long from $1.70. I hope if you want to sell it to me for $1.70, Johnny, I'd gladly take it at $1.70, and I'll just turn around and sell it for $32 because that's what the market is. Let's see. Hey, happy Valentine's Day to you as well, Lisa, and all the lovers out there. Have a romantic evening. I'm sure it'll be a good one. Let me go to Jay Bass. He says, could increasing number of bank reserve requirements be proxy to create increases and vice versa? Is there any history of this? So you're saying if they raise the reserve requirements. So what'll happen there is if the FOMC tells banks, you need to raise the reserve requirements, meaning right now they don't have to hold any of your deposits. But let's say they go back to a normal level like 10%. What that means is now the banks are under pressure. They cannot lend out right now. For all those new deposits, they need to save those deposits to get their books in order and make sure they have enough cash that the FOMC is requiring. So what that will do is that will slow economic growth. And what will happen is the yields will go up. Why would yields go up? Because less money is being lent out. So those that need money are going to be trying to get it, but because there isn't enough money in the system, those yields, you're going to have to pay more to get to borrow that money. So it's actually an argument for increasing interest rates if they raise the reserve requirements, which again is really, I think, why they haven't done it. They were too concerned about it, but they should. If they raise the reserve requirements right now to 5 or 10%, the long end of that yield curve would steepen, which is what it should have done anyway. But if you steepen the long end of the yield curve, you start to create economic problems and slower growth, because the higher that yield gets, the more likely you're going to choke economic growth. So the Fed certainly trapped in a corner on that one. You as well, Big Ab. Hope you do something romantic out there. Exactly, yeah, they host. Yep. All right, so I think I covered pretty much everything I wanted to get to. Obviously, let's real quickly look at our top 7 markets here, because what a day. What a day for you Bitcoin holders out there. From a technical perspective, crude oil has not really done much. We topped out. I mentioned we were coming in this overhead supply. I thought we'd have a little bit of a pullback. Today we did get one to the tune of 1.58%. I love it. Dollar index, just it held, right? Kind of, I thought we'd see more follow through with the dollar index, which would have led to more pain for the equity markets, but we didn't get that. We got a little bit of a pullback today in the dollar, as well as that 10-year, right? So you saw the 10-year yield sell off just a little bit. I think that's just a small pullback before we get a bigger uptrend going. Gold down 0.14% today. Silver was actually up, but for those that are looking at buying gold, we're coming into a pretty attractive point. You have a hammer formation today on gold. It's down near the bottom of this box range, which puts you at a low, right around, call it 1990. and we're at 2004. So you can use that whole number psychology and say, hey, you know what? This feels like a pretty good potential buy point here for gold. Yeah, I'm a fan. And also silver finally had a nice little pop today, at least a little bounce back up. Again, respecting that $20 price level. S&P up almost 1%, but again, technically nothing really that significant. Just ate back some of those losses from yesterday. NASDAQ, same picture, almost identical to the S&P. It was up 1.16. Russell was your biggest gainer, but remember, it was your biggest loser yesterday as well. So 2.41% up for the Russell. But the big story is my favorite, Bitcoin. You had a great breakout today. It actually hit 52,000. We're sitting pretty much at 52,000 right now. And again, I don't see a reason why this should stop. The only thing that's going to derail this, in my opinion, is if you get something that really comes out against Bitcoin from a regulatory perspective. Because now, and I've listened to a bunch of different people over the past couple of days, the belief is you're starting to see more companies open up to the idea of adding Bitcoin to their balance sheets instead of holding cash. If that happens, my forecast may be very low compared to where it ends up at in November of 2025. So love it. It was up 4.73% today, closing it right around $52,000. So awesome. Margaret says, would you sort SPY or ES on the day's shooting star? Well, if we look at that ES, we already talked about that on Monday's show. Monday's show was saying, look, we have a shooting star here. If we get down below it, there's your shorting opportunity. So that would have happened yesterday. I did not, because I was looking at SPY, and while we had the shooting star, we had that big gap now. Right? So that ruined it for me, because I can't trade it if it gaps down like this. It must open up above that red line and then drift lower, and which is what the S&P futures did. So right now, I wouldn't think that there's any real shooting star on the S&P. I think that's what you're asking, Margaret. Would you short SPY or ES in the daily shooting star? Yes, back there, yes, but not now. Now it's no big deal. I agree with you, yes. Bitcoin to the moon. Plus a lot of the cryptos having been moving up to. Yeah, Joe, you got to look at Bitcoin as whatever Bitcoin does, the majority of crypto is going to follow. So, Bitcoin was one of the bigger movers today. I'll show you my crypto watch list here, and we'll sort it by gainers just so you can kind of see how crazy things were today. I actually do still own Civic. I still own some Atlas, but you see some, nice 7-8% gainers in here. But notice Bitcoin, 4.08%. Now, if you look at the negative side, there's always stuff that's down. Unfortunately, I own Storage and I own Cosmos, so I own both of these that were down here. But typically rising tide floats all boats, so it's going to bring this whole market up. So wherever Bitcoin goes, that's what I'm looking for. So my two favorites in here are Bitcoin and Ethereum, which also had a really nice breakout today, and looks like it's just getting stronger and stronger and stronger. And there's some upgrades coming to the Bitcoin network, to the Ethereum network very soon. Okay, I'm out of breath, and I did way more than I was supposed to do today. So let me real quickly bring up, if you guys think you're having a bad day, you hear about that 19-year-old kid on that flight from England that said he's going to blow up the plane, and they had F-16 fighters escort it back down. The guy has to now pay a £100,000 fine. An idiot. Don't ever say you're going to blow up an airline using the Wi-Fi at the airport. As Ron White would say, you can't fix stupid. Anyway, let's go to your economic calendar for mañana. There was nothing really today, but tomorrow you guys do have a lot to talk about, right? Quite a bit. If you look here, you've got retail sales numbers, Empire State Manufacturing Index, Philly Fed Manufacturing Index, capacity utilization rate, industrial production, business inventories, NAHB Housing Market Index, and natural gas storage, as well as some FOMC members speaking. So tomorrow could be a very volatile day. I'm pretty excited to see how this all pans out for tomorrow. Again, I've got 9 potential things lined up here. We'll see how late I get back from the concert tonight. Could be a long one. It's up in LA. But that is your economic calendar. And then if you want to know the earnings calendar stuff, there are some earnings coming out, which I will bring up to you right now. Here is today's earnings. You had Cisco beat earnings. You had Twilo, Energy Transfer Partners, pretty much beats across the board. If you go to tomorrow's earnings, though, you've got Roku, Applied Materials, The Southern Company, The Trade Desk, one of Larry's favorites, Crocs, a hideous shoe company that makes foam injection shoes that are copied all over the world for about $1 a pair, but you can pay $60 at the Crocs store, and that's pretty much it. Let's see. Johnny, it sounds so weird when you say have a great VD. I hope to not have VD. Just have you thought about those tax consequences when you sell Bitcoin in November 2025? Yeah, Chio, not worried about it. I'm going to pay the taxes on it. It's fine with me. I will gladly do it. I may actually see if I can position things to find ways to take losses and other things so that Bitcoin would offset some of those losses that year. Do you have a subscription in order to have that many tickers stored in TradingView? So this TradingView account, John, there was no limit, and then all of a sudden they put a cap on it after the fact. So I'm grandfathered in, I think, with this account, but I need to switch over. I have a paid account. I have a 1-year subscription to them that I can do more ticker symbols than that. What else we got? Good. Chio wants yeah, I need to get a tax guy on here. I've been meaning to get a trader taxation person on, but what I don't want is somebody who's always selling their services. Like, give me information. You guys may have noticed that people who come across as super salesy, I don't bring back here. So I don't bring back on the show. I was out of town, but did watch the Super Bowl. Sorry, here. No problem, Todd. It is what it is. I think again, the Niners, I believe, lost that game. I think we made some mistakes that we ultimately are the ones that lost it. I don't believe that the Kansas City Chiefs won it, although hard to knock that last drive by Patrick Mahomes. Just brilliant. But anyway, it's just sports, so there's always next season. All right. Yep, John does it report tomorrow. See, you guys keep bringing up stuff right as I'm about to wrap up the show. Let me look at Coinbase, because that may actually be a popcorn trade of the day. Oh, yeah. That's right. I thought I had that on my earnings counter, but it didn't show up there. Earnings, yep, Thursday. Coinbase, after-market close. That will be an interesting one. So I guess we do have a popcorn trade of the day coming up for tomorrow, and that will be Coinbase. It's $161 right now. I assure you it's going to be all over the place. My guess is they're going to have blowout earnings. I think that they're going to have blowout earnings simply because they're holding that much Bitcoin for everybody else. VB Met, how low will natural gas go? I don't know, man. I think it's getting very close to a, back the truck up kind of buy situation, but it's in a free fall. It's in free fall right now, and until that free fall stops, don't touch it. I think that it's just absolute danger of wrecking yourself if you decide to get into natural gas right now. I'm going to end with that chart here of natural gas, which is down 4.7%. Take a peek at this chart. I mean, it's been a crime scene. I mean, this is an absolute murder scene for the price of natural gas. If you go from January of this year, January 12th, to where we closed at today, it's a 52% slide for natural gas, well below the long-term lows. And we are screaming towards this 150 mark. I think at 150, I'm a buyer. So we'll have to see. I think at 150, I will be a buyer of natural gas. And I'll probably do UNG for that one. But got to be careful. This is definitely catching a falling knife. Anyway, that said, I was supposed to end a long time ago. I've got to go. Hope you guys have a fantastic remainder of your day. If there's something that you want me to cover, just type it into chat, or actually don't type it in chat. Email me, TraderMerlin@gmail.com, or type it into any video down below a YouTube video of mine. TraderMerlin YouTube video, and I'm happy to answer that. And I will, what do you press to have that popcorn trade video pop up? I have about 30 different screenshots of layouts that I created for this. So if you look, I have this one I thought was kind of fun to do, like a market update, which I don't use this graphic enough. I've got my weatherman, which usually puts me down in the bottom corner, but I need to crop it better. I can point and go, you see right here, look at this demand zone right over here. I got that one. What else do I have? Of course, I got my fire one that I don't use too much. I got the chart of the week, which I don't use anymore. I got a lot of these fun ones. When I used to have guests on the show, I do like a trader profile, kind of going through them. But yeah, those are a bunch of different shots I have on the show, but maybe we'll get to one day. Anyway, see, I'm not looking at the chat anymore. You guys have a fantastic remainder of your day. I will see you on Thursday's show for the earnings for Coinbase. If you have anything you want me to discuss, email me or put it down below a YouTube video. And if you're new, hit that subscribe button. I'll talk to you guys tomorrow. Take care.